Welcome to the Family Banking Show with your hosts Rob, Derek, and John, where we dive into the world of the infinite banking concept and discuss personal banking strategies to secure your legacy and build generational wealth. We're glad you're here, and we hope this episode serves you well.
Welcome back, ladies and gentlemen, to the Family Banking Show. We're your hosts, Derek, Rob, and John. Guys, how's it going this week?
Great.
Derek.
Good. Busy. It's one of those busy weeks.
I get it. Guys, well, thanks for joining me again. This week, we're talking about Nelson Nash's book, Becoming Your Own Banker, of course, as we've continued in that series. This week, we're going to focus in on retirement income and just future cash flow planning, as some people describe it. Guys, just initially, what are your thoughts on retirement? Is it something that we should pursue, or how do we think about it as we help clients and our family members and loved ones plan for the future?
I start with I love how Nelson never really, if you go by what Nelson says in the book and other sources, and you just get to see him talk about it quite a bit, that he doesn't call it retirement, he calls it passive income years. Just even the word retirement means something is being put out, being completed, done.
Right.
That word in itself kind of implies an ending. So I like that idea of the passive income years, and hopefully if you have a properly structured policy, you'll have a lot of passive income in those later years.
Yeah, I think these couple pages talking about retirement really hones in on the point of rethink your thinking. Growing up, even in my early adult life, I always just assumed retirement, something that everyone's done for all of history. Even maybe I didn't think that consciously, but that's probably my assumption at the time was just I didn't even think twice about whether or not retirement is something to evaluate as something worthy to seek after, or at what age should I even think about it, or you're so young at times growing up, you just don't even think about where it came from, how we got here. And this book is just so powerful to help people rethink their thinking and question the conventional ways of understanding our personal financial lives, and retirement is a huge piece that people stress about, plan for, from your first, for corporate people from their first job in their early 20s, they're putting money away in a 401k, probably trying to just work towards this arbitrary date in the future that they're hoping to retire, and maybe never think twice about it. So this book is just a really powerful mindset book, to just reevaluate what we're doing in the conventional, way of doing things. So just really, really appreciate these 2 pages.
Do you guys recall, like you said, John, that we kind of always thought retirement was a thing that was just eternal? Everyone retires, but it's a created construct. Do you guys recall the history of retirement?
I believe Nelson even references it here on this page, on page 66, where he's talking about the initial starting point could be pointed back to Germany.
Yep.
In the late 1800s. Rob, do you have any other details you want to share?
I was just saying, it lends to that scarcity mindset.
Yeah.
That they thought there was a finite number of jobs for a finite number of people. They didn't have the creativity or imagination to think that there might be a way to have jobs for everybody, or things that people could do in their later years.
Yeah, and I even think about, I guess I'm one of the people that are, most of our listeners would probably feel like this is something that they've struggled with, of just, well, my parents retired or my grandparents retired at age 60 something, like, of course I'm going to do that too. Right. And even the mutual fund industry has, target retirement date funds of, okay, I want to retire by this date. I better, be in this mutual fund. it's such a ingrained and entrenched idea in our society of like everyone must retire, and if you're not retired by age 65, then you're lesser than the person next to you. And all reality, it's, you should always be working. You may not always be collecting W-2 income, but you should always be working.
Right. Yep. Yep.
And
Created with a purpose.
And if you plan intentionally, yes, there's a point in time where, potentially your assets can cover your liabilities and you can reap the rewards of your hard work over many decades. But yeah, I think even myself, I'm just like, I don't know. I'm not that excited about doing nothing or, not having or not living with a sense of purpose. I take my parents, for example. My dad's still involved in business and nonprofits and things like that, even though he's been retired for almost 17 years now, give or take.
Yeah, I think it's very important.
Absolutely. Well, Nelson has a couple of things to say here about the government plans, government sponsored, you name it, programs. And I do think there's some validity here of basically we shouldn't be going or planning our future based on what we think the government's going to do or what they're doing currently. There's a sense of personal responsibility that you as an individual, as a caretaker in your family, you need to plan accordingly and even use some of the worst case planning that you can, in my opinion. Why not plan for some of the worst events that have ever happened? And that there's going to be market corrections and crashes and things like that. So if there's a way to safeguard you or protect you, that's just being wise, in my opinion. What are your guys' thoughts on, how can we plan for the future, and how do the government sponsored programs kind of fit into that?
Yeah, I think Nelson Nash just simply states facts and like historical evidence of, and he's very, very upfront and forward about talking about socialism and its pitfalls and historically where it's failed.
Right.
And I agree, and I definitely see the evidence there. And I think, when thinking about it also from like a faith perspective, personally, like I think it really does conflict with just our kind of ability to stay in our purpose, to create, to work, and live according to, kind of what we're called to. So I think, and Nelson, was a Christian man as well, and I think he thought along those lines as well. So, thinking about it from that perspective, I think he's totally in line, just to expose the evidence historically of where socialism has got us. And I think he's then, relating pensions, social security, and government benefits that have been attempted in the past that maybe haven't succeeded, and so a question I like to ask people when I get to have these one-on-one conversations is like, is there anything that would have to happen in order for your current financial plan to fail?
Yeah.
And generally, like what I am receiving is in the feedback is maybe one or two things. Like if I were to get sued, that would be an awful thing to happen. Like if the taxes went up in retirement and I am fully planning on, hoping that my tax bracket is low, my plan would really, really hurt, So like Derek is talking about, planning for the worst, having contingencies and just kind of safeguards in place will provide just lots of peace, security, and just a foundation of strength from which you can take advantage of, market corrections or crashes or, real estate market crash, stuff like that, that we all want to take advantage of opportunities, but sometimes we're just too vulnerable and not protected enough, or, our holistic plan doesn't coordinate in a way that allows us to do that.
Yeah. Yeah. Then the big one, it's like, we never think about it, is one really great way to derail your family's passive income years or your retirement plan is for one of you to die. That will derail, an income earner, that's huge. And we just never think about it. And that's one of the key protections is the income protection that whole life gives us. So such an important piece of that financial kind of puzzle we're putting together.
Yeah, even just to think about, my family, if my wife were to tragically die, for one, my expenses are not going down.
Hmm.
My expenses will only increase as a result of losing a spouse.
Mm-hmm.
And think about, the value, the human life value that she has for me, for our family, right? It's no brainer. Like, you should have substantial amount of death benefit to protect against that.
Right.
Yeah.
And just like it's a no-brainer to insure your house. Nobody wants their house to get, caught on fire or some tragic accident to happen. And all of us want insurance on a terrible, accident like that to happen, to where we could just have it rebuilt, an insurance company pays for it, and we're planning for something bad like that to happen. But all the more, like, your spouse, your family, like, are incredibly valuable assets. So why would you not, want to insure that? And I know we're getting off on the tangent from retirement, but it's just a really powerful way to live, to be able to protect yourself and your greatest assets.
And let's just talk here real quick about kind of the history of income, passive income for people that were retiring. Prior to the 1980s, what was kind of the main source of that type of income for those individuals that lived long enough and were able to retire at a certain age?
Pensions.
Pensions were huge. Pensions, if you're not familiar, is a source of guaranteed income for someone in return for generally working for a company for decades, right?
Yep.
In today's world, pensions have kind of fallen out of favor. They might be making a resurgence, but I think of an alternative to that would be an annuity, which is basically a private pension. It's just between you and the insurance company, instead of you and the Fortune 500 company maybe that you worked at. So yeah, that the pensions was a huge source of guaranteed income for those individuals that were able to take advantage of it.
Yeah, and I think even stepping back a little bit earlier, when Social Security was established, and I believe it was during the 1930s, FDR, great deal, all of that. The age that they picked was just kind of an arbitrary, what did Germany do?
Yeah.
I guess we'll do that. And the average lifespan at that point, life expectancy, was around 67. And correct me if I'm wrong. So they're like, okay, if someone's able to live past the life expectancy, and maybe we'll give them a couple of years of Social Security, just benefits if they're able to outlive what they would otherwise have been planning for. But now, I mean, people are living till 95. One of my best friends, last year, his great grandmother died at 104.
Wow.
Yeah.
This continues and continues. So 65 is so far outdated when it was originally established.
Yeah, I've got longevity in my family line. My great grandpa was age 106 when he passed away. My grandpa was 96. My grandma, who passed away last year, I believe was 95 or 96. So yeah, there's a lot of longevity to be had in our family, which is great. Great.
Yep.
The cash value will build up. The death benefit will be great for the family. So I look forward to living a long and prosperous life.
Yeah.
Even before that, though, John, I mean, whole life insurance was still around before Social Security, and that was a source of income for a lot of people. And that's one of the things that we'll be talking about here later on tonight. But yeah, Social Security, which is basically just another form of an annuity, right? There was guaranteed income promised to these individuals for while they were paying in to the pension of the Social Security plan. So I even did some research recently. If you were to take the amount of Social Security taxes, or the amount of taxes that are collected on my income, And what is the projected, if rates stay the same, how much Social Security income, if it's still around by the time that I reach retirement age, how much income would that generate for me? And I compared that to if I would have taken that same amount that I'm paying in taxes and funded that in a whole life policy, I would actually have, I think I did the research, it was like 3 times as much income with the whole life policy versus the Social Security plan.
Wow.
And a death benefit on top.
Right. What a waste.
Yeah. Yeah, that's where Nelson says, he says it's axiomatic that any government-sponsored program will always accomplish the opposite of the stated intent.
Right.
Social Security is one of those programs that looks like that may be quickly coming to an end, but we don't need to necessarily get into the politics of that. I think the key takeaways for our listeners is live with purpose for as long as God gives you time on this earth.
Yep. Amen.
And plan as conservatively as you can, not in the sense of like stuffing cash underneath your mattress, because we've already talked about that. That's not a good strategy, but
Right.
Be wise and prudent with your finances. And last week we talked about how you can utilize a whole life policy to fund the needs of a business or even your financial needs in your life. And we looked at an example, Rob, so maybe if you don't mind pulling that up.
Yep.
What we talked about last week was a similar example as to what Nelson describes in his book, Becoming Your Own Banker, where a logger was financing pieces of equipment for his business. And we compared that to current rates today of small business loans and current illustrated dividend rates of life insurance companies. And we have found that by doing it this way, by financing things through his policy, he had an increase in cash value of almost $130,000 just by changing where the money was going. Instead of it going to Wells Fargo or Bank of America or Chase, it's coming back to his policy. And as a result, he's able to reap some great rewards because of it.
Mm-hmm.
And for our listeners, just so you know, we did some research. We did our own studies here of, what could this mean for future passive income in retirement? And so we illustrated this gentleman here. If he started taking passive income at age 67, and that continued till age 90, we feel comfortable based on current dividend rates and current illustrations that this individual would be able to collect $60,000 tax-free income for 23 years, starting at age 67. Now that works out to over $1.6 million in income, guys. And this gentleman here, based on this illustration, has paid $280,000 of premium over 7 years. That's over 5x, 5 times multiplier of future income versus premium. And there's still that income tax-free death benefit at age 90 in this instance.
Yeah, it's just kind of so impressive when you look at it. He just, for 7 years, he put in $40,000 a year into his policy, stopped putting in any more premium, funded his logging business, and then when he wants to enter his passive income years, he can pull out all that tax-free cash for 23 years. It's crazy.
Yeah, and just imagine if he would have only kept doing this policy for longer. If he had that cash flow available from year 8 till age 66 or whatever, he could have kept going even longer than that. He could have kept paying his premium all the way out to age 95, and the income that it would have generated would have been much greater as well.
Right.
But just to try to keep some things as close to apples as the illustrations in the book, based on current rates today, we wanted to be transparent here to demonstrate what this could mean for this individual.
Yeah, Derek, that's exactly what I was going to say. Is it's just imagine if he continued that premium, and that's something that I was hung up on when exploring infinite banking and whole life policies. I'm like, I have to pay X amount for my entire life, like until I'm 95 or 100 years old. That's pretty daunting, for lots of people. But when you understand that you're not losing what you're paying into it, in fact, the longer you pay, $1 turns into 5, 6, 7. Sometimes, if it's long enough and you started on say a child and in their later years of life, like it's
Right.
resulting in 1 to 8, 1 to 9 increase in your cash value. So you put it from your right pocket, put it in your left pocket, and now you have $9 more. Like it's incredible. So this illustration in my mind assumes this person just stops making income after 7 years. Otherwise, why would you stop paying? As long as you plan on having income, I think you should plan on, funneling or sequencing those dollars first into these policies, and from which you can, equipment finance or finance things of life or take advantage of opportunities, whatever it may be.
I think
Right.
also that for our listeners, it's a good reminder that it's funny. Like I had the same thought go through my head, John, is when you start your policy, it's this kind of, you get like this, oh my goodness, I have to pay this every year for the next 60 years, or it's going to all fall apart on me. And that's just not true. If for some reason after year 30 or whatever, if you decide you want to stop paying your premiums, you can. You just convert it into a reduced paid up. You don't have to pay any more premiums, and it still keeps growing for you, cash value and death benefit. And so just for our listeners, you're not like, if you want to stop, there are so many options for you. At some point, if you decide you just don't want to fund it, you can always stop funding it, and you'll still have your death benefit, and you'll still have increasing cash values. But what will happen though is once you start doing it, you'll start to realize you put in this premium deposit each year, and you're getting X amount more than that back. You don't want to stop putting it in. As a matter of fact, the way the policies are designed, a lot of them, due to MEC limits, you can't keep fully funding it throughout the entire life of the policy. And you'll just be wishing that you still could, because
Yeah.
every dollar that goes in, you're getting 3, 4, 5, 6 times back at that point when it's getting so efficient. So yeah, that's a common fear at the beginning when people are just getting into understanding the infinite banking process and how to use your whole life policy. But once you start to see that when you put in $1, you get 3 back or 4 back or 5 back, you don't want to stop. You want to fund it, and it'll be getting less expensive over the years. It's just like your house payment gets cheaper every year, in the sense that inflation is going up, but the payment stays the same. It really, you won't want to stop paying it. So it's what I'm trying to say.
Yeah, and John, even before we got on this call, you had talked about some of the benefits of just having guarantees in those passive income years. Why don't you speak a little bit to that?
Yeah, there's a recent study from a law firm that showed that if you were to take, say, person A and person B, and person A has maybe all of their retirement funds tied up in like a market correlated, or stocks or mutual funds, whatever it may be. Person B has guarantees, call it an annuity, whole life insurance are the main two, but guarantees in their financial picture. Person B with the guarantees is likely to live 40% longer than person A. And wow, like talk about the value of certainty at that point.
Yeah.
Understanding that peace that comes with the certainty, especially in retirement years, especially knowing if I'm 89, I'm likely not going to be working, like I was when I was 35, so the ability to produce that income lessens. So you want that certainty of income. You want that financial peace, not to use it common other saying, but you want that peace and that certainty to live to the fullest and feel free, and not stressed about, oh my goodness, is the market going to crash? Like, what's the Fed doing? What's X, Y, Z, and how is that going to affect me losing, running out of money? That certainty is huge, and I think to understate that value is just, you can't understate the value of that certainty.
Yeah, and just to add, when you're talking about life insurance and death benefit, living longer is a good thing. You want that for your family because it means that they're going to be in a much healthier position financially with you being able to live longer. And this retirement income, I mean, it could be utilized for any number of things, any expenses that you can think of in retirement. If you need this for healthcare costs or medications, you're going to go golfing or take a cruise, something like that. Like, this income has no restrictions to it. You can use it for any expense that you need. So
another thing is if it's scaled correctly and you design it to a certain level, then you don't have to wait until you're 59 and a half to start this passive income, right? There's no early withdrawal fee or penalty. If you're ready to just start taking passive income and if you're working with us, we can coach you through that, when the time comes. Then just start at age 48 if that's what makes sense. If you want to live to the fullest and you want to go to, Cabo or Europe or whatever, and it works out for you, like, you don't have to wait until you're 59 and a half and feel, trapped that all your money's locked in a retirement account. And if only you could access it without the penalties, I just think that freedom that you have is just huge.
Huge. Yep.
Well, thanks guys again for talking through this future cash flow planning, passive income years. I hope that not only was it beneficial to you, but also to our listeners. In this next episode, we're going to be talking about rates of return and how often it's so easy to get trapped into thinking, oh, I must be chasing some higher rate of return. We're going to take a look at an example from the book where Nelson shows utilizing an infinite banking policy as a place to also do investing, what that does to your rates of return. So I hope you'll join us in that next episode. If there's anything that you found super helpful and would like to get involved and get started in starting your own bank, then you can reach out to us, thefamilybankingshow @gmail.com, and we'd love to sit down and schedule some time. Guys, I look forward to our next episode. We'll see you then.
Yep. See you then.
Thanks.
Thank you for joining us. If you're interested in a conversation about anything we've discussed, you can find our contact information in the show notes below.
And subscribe, follow, and leave a review to help spread this message and to help families across the country discover the generational blessing of IBC. May God bless you, and we'll see you next time.